Good afternoon and welcome to HYCM's webinar. It's the FX Week Ahead live market analysis with myself, Giles Cochran, as we look ahead at some of the incoming events. And we've got a lot of events coming out this week. It's a very busy week in terms of politics and in terms of data. We've got a number of central banks meeting. So there's plenty for us to get our teeth stuck into this week. Just as I'm getting going, so say hello to people. Hi, Aaron. Hi, Hashik, Foma. Sayed, Van, good to have you on board, guys. If you could just, someone just type in the question panel and let me know that you can hear me okay, that would be great. So I know that everything, the audio and the screen are coming through okay. I think the audio seems to be all right on my end. I hope, I'll just check the screen. The screen seems fine. So I think oh, great. Thanks, Foma. Good. I'm glad that you can hear me. That's super. Right. Just before we get going, just again, I have to say this each time, and it's a good thing that I have to say each time, is as we're going through different currency pairs, as we're going through different central bank outlooks, etc., none of this is trading advice. So the whole idea of this FX Week Ahead analysis is not that I provide signals for you to copy or trades for you to execute. Instead, I'm showing you the main stories that are going in the market, so you can be better informed to make your own decisions. Okay, so this is not about me giving trading recommendations. It's about you looking over my shoulder, seeing the kind of decision-making process that I'm using as a professional trader, so that then you guys can think, okay, well, how does my thinking line up? So I hope you understand the way this works. So as we start, as we woke up on Monday morning, there was kind of like a mixed picture in the Asian equities. And the Asian equities are mixed because there's a tension in the tariffs that were just introduced by the US over the weekend, 112 billion US dollars on Chinese imports. That's just hit the ground, as it were. But this Chinese government also kind of gave hints that they were going to be stimulating the economy as well. So you can see that mixed picture in the equity market. So you can see that the Nikkei is down 0.41% at the time that I took this. Hang Seng down 0.38% on these new tariffs imposition, with the Shanghai composite was up plus 1.31% on the optimism about Chinese the People's Bank of China stimulus that may be coming down the pipeline. So that's why there was a little bit of a mixed picture in the equities. Don't forget, take the screenshot of this if you haven't. It gives you a good indication. Remember, in the market at the moment, we're getting this continual flip between risk on and risk off. And know that when we're on a risk on mode, that's when you see a lower volatility index. Here's the VIX here, volatility index. You see stocks rallying, commodities rising, bond yields rising, and then you get risk on. And in risk on FX trades, what you get is typically the Australian dollar, New Zealand dollar, Canadian dollar being bought. They're called the commodity currencies, so the commodity currencies are bought. And then you get the risk currencies like Japanese yen and Swiss francs sold. That's on a risk on environment. When it's risk off, you get the higher volatility index, you get stocks falling, commodities falling, bond prices rising, and that means bond yields falling, and that's risk off. And that's when you're really seeing Japanese yen strength, Swiss franc strength, and Australian dollar, New Zealand dollar, and potentially Canadian dollar weakness as well. Okay, so that's kind of just you need to get that in your head. Okay, so either go back over this recording, listen to it, take a screenshot of this. This will help you start familiarizing yourself with these different markets. This is called intermarket analysis. And it's something that you just need to start introducing yourself to, particularly if that's new to you. Start introducing yourself to it. Start, okay, follow what the S&P 500, the FTSE 100, the DAX, and the Nikkei are doing for starters, okay? And watch how the rise or the fall of that influences risk. It's for another time, but that's just, where we are on Monday morning. And often on a Monday, the market resets. It's kind of like we've had 2 days off. The market resets and it's a fresh mood for the week. So we're just getting things going and waiting for something to happen this week. Now, this is a big week for Brexit. Now, the House of Commons are due to return to Westminster tomorrow. You can see here the Commons is due to sit tomorrow. Now, at the moment, a Parliament suspension is due to take place between the 9th of September all the way down to the 14th of October, when the MPs are due to return. So there's this huge suspension of the Commons, and that was due to Boris Johnson doing something called proroguing Parliament. So there's this huge delay for the House of Commons. So this is creating some problems for opposition MPs, because it gives them very little time to try to stop a no-deal Brexit. So what that means is these next few days are going to be absolutely, chock-a-block with headlines and news, on Brexit. And if you've never used a RAN squawk, okay, you've never used a squawk, this could be a time to see if it works for you, okay? I'm putting in the answer box, I'm putting you in a squawk that I use called RAN squawk, and it's very helpful, and they have a free trial. So, if you were going to take a free trial for the RAN squawk, this would be a good time to take a free trial, because you would get the breaking news exactly as it happens. I put the name of the product in the box. I've sent it to you all on your messages, so you should have that there. If you're watching this as a recording, it's just called RAN Squawk, okay? And you can go to it and you can access that. You will get 2 weeks of live news for free as you're trying out the service. Right, now, back to the case in hand, and that is tomorrow, Wednesday, Thursday, there's going to be enormous pressure in these next few days, and the pound is going to be really headlines driven. Now, what's going to happen? Now, obviously, in an event like this, no one knows ultimately what's going to happen. However, what's going to happen is MPs are going to try and pass legislation blocking a no-deal Brexit. Now, at the moment, Boris Johnson and the Conservative Party, with help from the DUP, have a majority of just one in the House of Commons, okay? So that means he only needs a few rebellious Tory MPs to vote against the government, and if that happens, then it's possible that a law could be passed that would, potentially block a no-deal Brexit. Now, if that happened, which is possible, Boris Johnson has said that any rebel MPs doing this will be thrown out of the party. So what's the picture that seems to be emerging, and obviously this is happening real time, our 2nd of September here at 1:30. So this is subject to change, like everything. However, what seems to be happening at the moment is this. Boris Johnson seems to be saying almost that, because there's rumours circulating in Westminster that a general election could be called. So what Boris Johnson seems to be saying is, if MPs do pass a law to block a no-deal Brexit, he'll call a general election, and then that general election will be thrown back to the British people, and the British people will vote again whether they want, Conservative or Labour or all the different parties that are here in the UK. So if Boris Johnson does call an early general election, at the moment, the Conservative Party, the nickname for the Conservative Party in the UK is Tories. So the Conservatives, or the Tories, are ahead in the polls. This was a poll I saw over recently from one of the big tabloids in the UK, tabloid newspaper, The Sun. And at the moment, they've got a projected majority of 28 for the Conservative Party. So at the moment, the Conservative Party have a stronger lead than they have done previously. So that's a big bump up for the Conservatives. And obviously, it's partly been the fact that Boris Johnson has been decisive about Brexit. We've had, 2-3 years of Theresa May being very, very indecisive about Brexit, taking a deal back to the people, Parliament rejecting it back to the EU, lots of uncertainty. Whereas Boris Johnson has said, come what happens, we're leaving the 31st of October. And so the British people have said, well, at least Boris is giving us certainty. Let Boris get on with the job. The people in Britain are very tired of Brexit concerns and ongoing issues. And obviously it's affecting the UK economy, just because businesses, companies, they can't plan, they can't invest, because no one really knows what's happening. But that's the issue. So what I'm looking at for the pound, just so you can see, I'm looking at the pound-yen pair, right? Now, I like the pound-yen pair potentially for a pound short, but I'm not jumping in now. Okay, this was a chart. I just just a little trend line that just to put up there, very nice and simple. You can see that trend line has been broken. Okay, now I'm not trading this at all because I am waiting for something fresh. I'm looking for some definite fresh news, something that's new, something that changes the situation. And when that news comes in, that's when I'm going to look at initiating a pound position. I'm not wanting to get caught around with these headlines. A lot of these headlines, they can be speculative, they change, and then they're one thing the next minute. So look for something that's fresh and new, because when something definitely fresh and new comes out, the pound will move for good 70, 80, 90 points. That's what I'm personally looking for. The pound yen chart is an ideal chart for me, because if there's something negative that comes out for the pound, that's weak on the pound. And I know the yen is strong at the moment because it's a key risk off currency, and when markets are concerned, they buy the yen. So that's a key currency that I'm looking at. And you can see, from a technical perspective, you can see, okay, pound rejecting that key pivot point, moving down to this support point. You can see, looking at the exponential moving averages to get the pivot points here, you can see the 100 exponential moving average is working support. You've got a descending trend line here. So you see, you've got these kind of, that's sort of almost like a triangle that's formed. And you've got, the pound breaking out of that triangle. So the bias is towards the downside here, potentially up, retest, down. However, I'm not I don't purely technical trade. That's just the technical picture, and I'm waiting for something fresh for that scenario. Now let's look at the week ahead, because there is plenty going on this week, and Brexit is just part of that picture. So let's get all of this from 1st to the 7th of Saturday. Ooh, sorry, I just turned my phone off there. Yeah. Sorry about that. I'm just turning my phone off there so it doesn't interfere with what I'm doing. Okay, so here we go. So what we've had so far on, no, we don't want September, we want September the 2nd. Here we go. Apply some 2nd, 7th, 2nd to the 7th, apply settings. There we go, that's what we want. There we go. Okay, so far this week we had the private manufacturing PMI data out of China. Now that showed an expansion, which was good news for the Chinese economy. But this is the private PMI, but the regular PMI for just the state PMI didn't show an expansion. So there was a mixed PMI figures out for China. We had some weak PMIs out of Italy, France, and Germany. You can see these are all weak numbers here. We had the manufacturing data was weak out of the UK. No surprises there. Not particularly market moving, but just forming that wider picture. Now the US are on holiday, so expecting less liquidity in the market for this afternoon. So that could mean you get some bigger moves. So just to be aware of that, particularly with Brexit headlines. We've got the US on holiday, we've got Canada on holiday. So that North America session is out for the day. Now, the interesting data point that we have here is for Tuesday, the 3rd of September, we have the Reserve Bank of Australia cash rate. Now, this is very interesting. The expectations are for the RBA to stay on hold, okay? The majority of analysts see the Reserve Bank of Australia keeping the cash rate as it is. However, I did read a report from the Nordea Bank, and what they were putting, they actually initiated, again, this isn't trading advice, but it's just showing you what they're thinking. Nordea have actually gone short on the Australian US dollar at 0.6726. So let's see where that is, 0.6726. So I'll just go, this is what the investment bank Nordea is. So they're 0.6726. So they went So they went short here, 0.726, into the rate meeting because they are thinking, well, they could see the Reserve Bank of Australia actually cutting rates sooner, because expectations are for the Reserve Bank of Australia to cut rates in October and November. But Nordea Bank think, well, okay, they could see the Reserve Bank of Australia cutting rates in a surprise way in overnight trading coming up. So that's just something to be aware of. There's a potential. Now, that is potentially what I would consider a high conviction trade. If the Reserve Bank of Australia suddenly cut interest rates by 0.25% of a basis point or 0.5% of a basis points, then you're going to see a sudden fall in the Australian dollar, and that's the kind of trade that I would just enter in at market. Okay, so be aware of the potential for an unexpected interest rate cut from the Reserve Bank of Australia. Okay, if everything just hold, remember the picture is bearish for them. They're expected to cut October, expected to cut November, but if they cut tonight, it will be unexpected and would see more of a downside. Remember, the Reserve Bank of New Zealand cut rates unexpectedly recently by 0.5%, and that worked well for them. So you could see the Reserve Bank of Australia doing the same thing. And interestingly, I saw a report on Barclays Bank. Barclays Bank were recommending their clients going short on the Australian New Zealand dollar pair. You see that 1.0700 level, kind of containing price up there. So it's recent highs up here. So look, prices come into that, and they're recommending that their clients went short Australian dollar and New Zealand dollar. I'm just having a look on the feed to see if I can see some more details of what they said. Barclays it was. Just give me a minute. Oh yeah, Barclays, they had it down as their trade of the week. Yeah, they had it shorting. They had shorting Australian dollar, New Zealand dollar at 106.66. So they had it shorting from this level here, 106.66, and they got a target of 1.0560, which is down here on that 200 exponential moving average, and they had a stop at 1.0750. So that's what they were going for. That was their Barclays trade of the week, short Australia. Now, and that's because of the expectations that the RBA is going to, have a more dovish outlook. Okay, interesting trade. Not something I'm in or advocating, but I'm saying that these are the kind of thinking that's going into these decisions, and I'm just saying that if someone said that's a trade that they were looking at, you think, okay, that makes sense. US PMI data, you've got 3rd of September, and you've got PMI data out of the US. The general picture for the US is that the US economy has been holding up pretty strong, and the expectations have receded for a 50 basis points rate cut at their next rate meeting. And currently markets are saying they reckon the Fed is going to cut once in September, and then they'll be like hawkish. They'll be like, okay, we've cut, and now we don't anticipate having to cut again, or something more hawkish. The only difficulty is President Trump wants the Federal Reserve to cut interest rates more and more and more. So there's a political pressure on the Federal Reserve not to say something that's going to obviously annoy Donald Trump, who really wants very, very low interest rates in the US. So that's to be aware of, and not necessarily expecting anything market moving. But what is interesting, the next interesting data point is the Bank of Canada rate statement on Wednesday, September 4th. Now, the situation with the Reserve Bank of Canada is this. The market is expecting and has been kind of waiting for the Bank of Canada to turn dovish. They've just been waiting for the Bank of Canada to say, oh, okay, we're not as hawkish on our currency as we have been. There's loads of global trade risks, that the oil market is low at the moment. So we're expecting that, we might start looking at cutting interest rates. They haven't said that, but the market is waiting for them to say it. So this is the big kind of expectation going into that rate statement, is that the Bank of Canada turns more dovish. So I tell you, the currency pair that's very interesting for that is the US dollar and Canadian dollar pair. Now, you see here, okay, this is this is here, right? This is a daily chart, US dollar, Canadian dollar pair, okay? The dollar index has been, strong for the US dollar. US dollar is being bought for reasons we've explained. Economy pretty strong, expecting the Fed to do a hawkish rate cut. The Bank of Canada expected to turn dovish. So on Friday, what we saw some really, really good GDP data out for the Canadian dollar. Now that GDP data was like 3.7% versus 3% quarter on quarter. So a great reading. And so we saw the Canadian dollar being bought, but then as soon as it was bought, it was just instantly sold off. Because it's like the market is saying, we just don't believe it. We just don't believe that the Bank of Canada is going to be anything but dovish. So there's an old market saying, if something can't rally on good news, then it can't rally at all. In other words, that the expectations are so much for the Bank of Canada to be sold that the market is just desperate to sell the Canadian dollar. So you saw that, and you can see this pressure mounting under this 1.3350 level. This is now a key overhead level, okay? So, there is a case potentially for buying the US dollar, Canadian dollar into a dovish Bank of Canada. You've only got a day to do it, okay? So it's not like you've got a lot of time to run into it. But having said that, if you look, looking down, let's put some pivot points in. I'm interested if price returns back down from here. If price returned back down to there potentially, I would expect buyers to enter the market before the Bank of Canada rate meeting. So that for me is a very, very interesting area. It's this this 1.3300 area. Okay, it's a big round number. Got a pivot point, got the 100, 200 exponential moving average, all in that level, and you've got a fib retracement level here. Okay, so that level here, the 50% level here, and the 61.8 level here. So there's a lot of factors lining up there. So potentially any retracement back here before Wednesday, I would expect to find buyers off that level, holding into that rate meeting, holding for a dovish Bank of Canada. Now, looking on to Thursday, we have the Swiss National Bank Chairman, Thomas Jordan, speaking. I'm not expecting anything market moving from him. And Friday, obviously, got the big non-farm payrolls and employment numbers out of the US as well as out of Canada. And there's potential for further continuations on a US dollar Canadian dollar trade, depending on what what happens with the Bank of Canada, and then what data points you get out of Canada as well as the US. But the picture generally for the US is pretty robust and pretty strong. So you put that together, and we've got a very, very busy week coming up. But as I said, it's potentially a slower start with the Canadian holiday.
The Trade Fund, China's Commerce Ministry, has lodged a case against the US at the WTO.
So that was a squawk, I just turned it off. So a quieter start in the US session. We're just coming into now. The US session has just got underway. So not expecting a lot here. But remember, in quiet markets, what you can get is markets moving very quickly. You can get strong moves on not very much. So be aware of illiquid markets coming up. Guys, do you have any questions? Are there any questions? Any trades you're looking at? Please do pop it into the question panel, because we have time now. Hi guys, some of you guys have come in since we started. Isaac, Sammy, good to see you. Aaron, good to see you. Van, Olufemi, good to have you guys. So if you've got a question, yeah, pound US dollar, yeah, okay, let's have a look at the pound US dollar. Now. Okay, so the pound US dollar is being pushed around primarily on Brexit concerns. Okay, so if we just look at it from a weekly chart, we can see we're falling down into this really, really strong support level down here, right? So here, make that the one. But big round numbers have a big significance in the market, okay? So it's here, it's a 1.20 level. So we've got some major support. That major support level is just here. So we're just going to put it just. There we go. So that's the main. So we're just hovering above this major support level on the weekly chart and the daily chart. We go down to the hourly, we can see, and we can see recent lows here. So the pound is really pushed down here. Now, what's going to be moving the pound is going to be Brexit concerns. So I'm waiting for something fresh and new, Hashik. I want something that's really changed the situation. At the moment, we're just seeing lots of sort of whippy price action. There's a news, headline here, headline there, and there's lots of headlines hitting the wires. And it wasn't too long ago, maybe I think it was in March of this year, when hedge funds were actually turning their algorithmic news traders off because they couldn't cope with the number of headlines. So the temptation is to get sucked into every little headline. The thing that I'm waiting for something new, something that fundamentally changes the situation. So wait for the big move, wait for the key change and shift. That's where I think the money's to be made trading the pound. Pound US dollar is a fine pair to trade on Brexit news. Just to remember with it that we're looking at US dollar potential strength and pound weakness. So a pound US dollar short does make sense. So that's the way I'll be looking at it. Hi, Sammy. Sammy, do you have a question? Hashik, does that make sense? That's what I'm waiting for. I mean, you can see, look, the pressure on the pound has been selling off, since May, just selling. But we're reaching a turning point. Yeah, good. Okay, that's great, Sammy. Yeah, Hashik, good. We're reaching that turning point there. So definitely a pair to keep your mind on. As I said, I prefer the pound-yen pair for trading the pound at the moment because of the strength in the yen. Because any minute you could get Donald Trump announcing new tariffs, the yen could be bid on Brexit concerns, the yen can be bid on US-China trade war concerns, the yen can be bid on political concerns, the yen can be bid on so many different reasons that it just seems a really good currency to pair it with. As some of you guys who follow me, I'm always looking at trying to pair a weak currency with a strong currency. So in this scenario, the pound is the obvious weak currency and the yen is the obvious strong currency. And you can see, look, as that's played out, since May of this year, look, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So of those 1, 2, 3, of those 14 weeks, we've had 11 weeks of selling and 3 very minor weeks of buying. And even in the most recent history, we've had 1, 2, 3 weeks in a row of buying, been very, very minor buying pressure, and the majority has been bearish. So I'm fundamentally bearish on the pound, but before I initiate a new position, I want a fresh driver, something new, something that really pushes the pound one way or the other. And obviously, the pound yen pair is the bias pair for a pound short. That's what I'm looking at. Okay, guys. Well, I hope that helps. Don't forget, tomorrow we have the FX workshop, and that will be taking place tomorrow, 1 o'clock to 2 o'clock GMT. And don't forget as well the offer that HYCM do, which is if you deposit these different amounts into your account, you get a coaching session with myself. I did just one of these last week, and it would have been very helpful. The person, thanked me that it was helpful for them. So thank me for my time, rather. So if you just put $1,500 in, you get 1 hour coaching session with me, $3,000, 1 hour, and 1 hour follow-up. 10,000 2-hour, 1-hour follow-up, 1 week VIP supports. Just to let you know, these offers are there. This isn't money that you pay. This is just money that you deposit into your own account. And so this is just a yeah, Isaac, you can watch this later as well. Just go to HYCM's website and you go to the education section, and you'll see that these FX week aheads are recorded, so you can just watch them later at your leisure. Okay, guys, that's really good. I look forward to seeing some of you tomorrow. Watch out for Brexit headlines. There's going to be some this week, so keep your eyes peeled, and don't forget that free Squawk service, that free trial for a Squawk service. If you haven't taken it out before, you might want to consider taking it out this week. Okay, guys, take care. You're welcome, Olafemi, and see you tomorrow. Bye now.